Welcome to Lecture 7 of the course, and we're going to dive into Sturgeon's Law, 90% of everything is crap. So here's Theodore Sturgeon. He was a science fiction writer and critic, and what he noticed was that 90% of the things that he read were absolute crap. And we feel like this is a great philosophy to adapt towards markets and use of a price action system, because most setups in the market are going to be crap. And we find that this law is true of everything in movies, music, books, poker. You know, how many movies come out a year where they just completely flop and they weren't good? Music, so many songs are released and uploaded to YouTube every single day, and they're just absolutely suck. Books, how many books are written every single year, and very few of them are actually truly great. Poker, how many hands are you dealt pre-flop that you have to muck and fold because they're just not very good? And the same thing in trading. So if we're poor at carefully selecting our inputs, we're going to end up with crap output, and price action is no exception. So most price patterns are noise. They're not actually signal, and we are living in a sea of randomness when it comes to price charts with very, very few pockets of clarity. So it's important that we keep the Sturgeon's law in mind when we're viewing the charts and trying to select trades. Here's the law said differently by Dutch philosopher Baruch Spinoza: all things excellent are as difficult as they are rare. So we got to understand that the very best trades are going to be hard to find, and they're going to be rare. We saw this come from not only people outside of trading, like those philosophers and Sturgeon, but within trading and investing, guys started to notice this as well. So the famous fundamental investor, Ben Graham, he would talk about how value investing doesn't apply to the average stock. Only in outlier situations do you find stocks at extremely low price and trading at a discount compared to what they should be worth. It wasn't, you couldn't go out to any old stock and say, oh, this is a value stock because a certain ratio is low. No, it's an outlier situation that really produced the best returns. And the same thing could be said for something like a trend following system, where 90% of the profits come from just 10% of the trades in a year, because the big moves that really pay the trend followers happen very few and far between. So when we're using price action, we want to keep Sturgeon's law in mind. We are not trying to find any old trade. We're looking for outlier opportunities, the best of the best patterns, the most crisp patterns that we can take and make good money on. So most of the stuff you're going to want to throw away. You're going to look at a chart and look at a pattern that looks all right, just completely throw it away and want to pass it over. So there's going to be a lot of strict filtering down to the absolute best. It's not, price action and charting is not a tool we want to use to explain a bias that we have, or to come up with any old trade just because we feel like trading. It needs to be a very strict filter that only leaves us with the absolute best of the best opportunities. So our analogy that we like to make is we want to be like Leonardo DiCaprio, not Nick Cage. Okay, Nick Cage takes tons of scripts. He gets in a ton of shitty movies. And in comparison, Leo is the opposite. He's extremely selective of his movies and therefore makes classics and extremely popular movies time and time again. So Nick Cage, right, he's in all of these types of movies. Some of them, are all right. A lot of them suck, but it's because he's just pumping these out and he has a quantity aspect to the way he approaches it. Leo, on the other hand, he's looking for the best of the best scripts, trying to work with the best of the best people, and that's why he's coming out with consistent hit after hit after hit, and he has done so well over the course of his career. He's always stressed quality over quantity, looking for that last 10%. So a sign that we are in line with Sturgeon's law is that our methodology is rejecting actually most of the potential trade ideas. So selectiveness is something that is a feature, not a bug of any price action system. So if high quality opportunities are indeed rare and markets are in line with Sturgeon's law as we think they are, the outlier nature of markets would tell us that being very selective and rejecting is a lot of things is positive for our trading P&L. So a good way to think about it is the markets will be in sort of a fog of war about 95% of the time, and occasionally this fog parts and creates an outlier opportunity that we need to strike at. So the markets are mainly an efficient organism. Okay, they're mainly just moving around in noise-like fashion. There's not much edge, but once in a while, price action will line up perfectly in something that's very crisp along with a fundamental theme coupled with favorable sentiment, and you're going to get a pocket inefficiency that can be exploited. But these are extremely few and far between. So the price action helps us qualify and filter out down to the potential outliers. And then within the system itself, within the charting system itself that we end up using, and we'll go into that much later in the course about what specifically we do, but we want that to only allow us to take the very, very best of the best patterns. And so if you can stick to this concept, this Sturgeon's law of 90% of everything is crap, and throw away most of what you see on the charts and only stick to the very best, you have a much higher probability of doing very well.